Hey everybody, still here for the Daily Market Pulse for Thursday, July 10, 2014. So we had the markets really severely gap lower on the open this morning and then come off their lows, however. Recover those losses majority. They still were down for the day. Volume extremely high, which means buyers were stepping in big time. Probably adds a distribution day, so I've got it at 6 and 5. At least I'm going to check out that as the day progresses, the real numbers settle in. Right now, volume seems to be very high, but with the downside, it's at least a 0.4% drop. So anything over 0.2% is considered a distribution day. So the numbers are high, but at the same token, we may be getting a distribution day and vice versa, getting the beginning of the reversal almost immediately in the same time simultaneously. So we'll see how that goes. We're still under pressure, of course, because of it, but the recovery is nice. I'll show you the VIX. The VIX did the exact opposite, gapping higher and then fading aggressively to its lows. So if you look at the Nasdaq, unfortunately, I'm sorry, the Dow Jones. We don't have the data's not coming in right now when I'm recording this, so it's actually gap lower and then finished down still. So it came down near the lows of 16.8, I believe. But if you look at the S&P, you'll see it there. The S&P didn't quite gap lower like the Nasdaq, or the Dow Jones, or even the Nasdaq for that matter. We see it just dropped, hit the 20, came right back. Lower shadow. It did finish lower, however, but still, as I said, it still looks like more like a flag. But that lower shadow certainly gives a promise that, or at least confidence and enthusiasm that the bulls and buyers are stepping back in to bring this back toward 2,000 for the S&P 500. There's the Nasdaq gapping lower into 43.50, and the other support level that we had below the 20, but came back above the 20. Again, finishing lower than yesterday's close, below the 8 moving average as well. Room to the window, the falling window at 44.50, and then still 4,500 being a target above. Almost oversold at this point as well, so that's encouraging for the bulls. TSX data not in either, but essentially based on the bounce, we're looking for at least if it gaps lower to the 20, it's going to bounce back as well. So I don't have any idea what happened actually here on the TSX. If we look at the DAX, however, the DAX failed the support level of 9,800 and dropping to 9,700 and actually slightly below that even as well. 200-day moving average as well as, let's see, I'm going to put another line in here. Probably best to put one right in here. That's exactly where the support level is right now, 9,600 approximately. We just drop it to the round number. That would make more sense. So there's 9,600, and then we got the next level below that near 94 to 9,400, 9,420, 9,450. Pardon me, would be the next level below. Usually when the markets drop, U.S. dollar gains. In this case, that's actually yesterday, closed at 106.50. So it dropped from 106.75 down to 106.50 again. So it's essentially the same as it was after going a little bit higher. It dropped back down to the same level it was yesterday. Nothing really ventured, nothing gained. Treasuries did go higher through 137, hitting 137.24, then fading back to the resistance area at 137. So interestingly, the markets can continue higher with the treasuries at a resistance level, rejected with that large upper shadow and overbought. We might see the treasuries actually fail back toward 135. Markets will actually have a chance to perhaps recover and resume its uptrend. The yen did bounce fairly aggressively toward 99. That was the expectation. It's done fairly well. It's got more room still to try to get higher. Let's see if it does so or not. And our level of expectation on gold and silver was that they might go higher. They sure did. They got through the 1335 level, looking now for higher levels of 1350, 1360, or even more. And silver, hopefully we'll see the candle, but it's essentially very similar to this. There it is, large upper shadow, yes, into 2150, but still looking for 22 as a target above, with now this 21 level to 21 and a quarter as a support level going forward. Okay, there's crude after the big drop, multiple days to the downside, multiple red into the 50, into the lower trend line at 102 and bouncing. Essentially was a bullish piercing earlier in the day and has faded just ever so slightly beyond the midway point of the previous session's candle to essentially negate the bullish piercing, but we're going to essentially call it a bullish piercing at this point. New low, a lower open, and a very, very nice reversal. Now, still the trend, of course, short term is still down. The 8's moving is still declining. If you draw a trend line over the highs, right? It's still going down, so it needs more work, obviously. But there's support that may be enough to confirm it. We'll see if that's the case. But certainly 104.50 becomes the target first and foremost. Then we reevaluate crude at that point. Let's move over to the small caps IWM. There is a gap much lower. So 116 was support below the 20. It gapped all the way into the 50 and the other pivot area from late May, and bouncing back toward 116, but still finishing in the red for the day. But very oversold at this point, bouncing back. Still, the trend is down short term for the last 5 days, but still, we will see if they can again push off from this level and go higher once again. VIX, as I mentioned, as the markets went lower on their open, the VIX went higher on its open and then faded aggressively. Now it's above the old trend line, it's above the channel, so essentially that could be acting as support. Plus there's a rising window as well near this 12.5 to $12 range. We'll see what they do with that, if they can hold it or not at this stage of the game.